there is a mass exodus in terms of capital flight from Canada.
Better weather and a lower cost of living, or something like that.
Lower taxes.
Yeah, lower taxes.
They're looking for, investment vehicles, whether it's the US or other markets where it's like these economies are kind of doing better than ours and I want to put my money to work.
I saw so many families come to the Dominican in the 4 years I was there and run out of money and leave. You're going somewhere new. You may just need some runway and it may not work. So if it doesn't work, at least you got this in place to sort of, to stabilize you. Most people underestimate what's necessary and what's needed to move to another country and survive.
This is The Wealthy Lender, episode 7. I'm here with Chris Nichilo, founder of Magnetic Capital Group. And today we'll be talking about why private lending is the ideal investment for a Canadian expat.
Such a great topic. Such a great topic because, and I know a thing or two about this. Now, granted, this is all opinion. So some people are going to take issue with what I say, whatever. But I did this. I moved to the Dominican Republic in 2019. It wasn't to move there forever and live on the island, but it was more, we wanted to live there for a year, and then COVID happened and ended up getting extended. I stayed there for 4 years. But nevertheless, I got the experience of seeing what it's like to be an expat in another country. And I saw a few things, talked to a lot of people, a lot of investors, a lot of people who are, doing, what people, a lot of people talk about, which is, hey, I want to move to another country. And typically the reason why you want to move to another country is the lower cost of living, right? Or better weather and a lower cost of living, or something like that.
Lower taxes.
Yeah, lower taxes, right? So, but typically where you're going, again, not all the time, but where you're going is a country that's maybe not as affluent as Canada, right? And so the difficulty becomes, it's great to go there. It's great to experience a lower cost of living, but you still have to make money. And it's more difficult to make money in some of those countries than it is to make money in Canada. So the question is, could you have the best of both worlds? Could you live in one place but make money in Canada? Of course, you can do it two ways. You could be an entrepreneur, right?
Right.
Or, if you're really fortunate, you could be an employee that's able to work remotely full time.
With a very lenient boss.
Yeah, very lenient. Yeah, exactly. But in a more typical sense, you're probably looking more so at, you're an entrepreneur, you own a company that's either based in Canada or online, right? And you're able to make money from anywhere in the world.
Right.
Or you've already made your money and you're able to take it with you, experience the lower cost of living somewhere else and put your money to work and be a great investor. And that's where private mortgages come in. And now, again, I always want to qualify what I know. And what we're really good at is private mortgages secured against residential properties in Ontario. That's the market we know. That's the property type we know. We do it really well. We do it every day, all day. So that's when I'm talking about investing in private mortgages, that's what I'm talking about. So it is, in my opinion, the ideal investment for someone who's moved to another country for any of those reasons, whether their circumstances are that they've got the money, they've already made their money, and they're investing. I think, as people, it's hard to do better, because let's say you have $1 million. So you have $1 million, you've saved, and you're ready to go, and you find a nice cheap property somewhere on a Caribbean island, and cost of living is really low. And you look at it and you go, okay, well, if I, spend a couple $100,000 to buy my house and I've got 800 left over, or for easy math, let's just say you went with 1.2, you spent 200 and you got $1 million left over. That's your nest egg. Well, if you went into private mortgages, built a portfolio of private mortgages against residential properties in Ontario, I could tell you right now, it'd be very easy to deliver about a 9% return very safely. If you go 8%, you're getting it. All you're doing if you go to 8 or 7 is just getting lower and lower loan to value mortgages, first position mortgages. So you're just adding more security at the expense of a little bit of return. But if I mean, you just have to do the math and go, well, okay, I got $1 million. How much do I need to live every month? I own my house. I own the car. You know, I live on a Caribbean island. You know, I like to
There's
golf, or I like to do this, or I like to do that. Whatever it is $5,000 enough? 60 grand? Do you
oh,
need 70?
I mean, from what I understand, there's a lot of places where you can live like a king for 2 or 3. So
Yeah.
that's-
Do you need 60, 70, 80? You determine, right? So all the way up to say 90% or 90,000. So if you wanted to get 9%, I think you could do it. I think you could do it very safely, comfortably. You may have the odd interruption where there's a payment missed or something, but in the end, it'd be difficult to lose if you did it right.
Mhm.
But if you really wanted to be, safe, maybe you go in at 7.5, 75,000 a year. If you can live on that, you're laughing, right? You got $1 million out. You're probably not going to lose any sleep. And all of a sudden, you know, you've sold your home in Canada, made lots of money there. You've got your nest egg and you've taken it somewhere else. And now you're the bank, right?
Yeah.
The only property you own is yours, the roof over your head, right?
No, I have a colleague who's sort of in a boat. He's got to leave Canada, and they scraped and paid for their house cash. But now they have to leave, and they're going through all the rigmarole and headaches of, okay, how do I get a tenant in there? How do I manage remotely? Okay, there's a management service that a lot of companies provide, but then that eats into my yield. So
Hmm.
I was just like, man, private lending is just the key for that.
It's funny. So I agree. There's all these different ways that that dream of living on an island somewhere can be executed, right? It's not. I mean, private mortgages aren't the end all and be all. They're just a really good fit because they check all the boxes: certainty, predictability, fixed returns. You know, the money's made in Canada. It's deposited into a Canadian bank account, which makes it easy for you to move money to wherever you are. And the security profile is great. But you have a lot of other ways that people try to go about it. I saw when I was down in Dominican, so many people come down, buy a house for themselves, buy two other ones and try to rent them, right? I had people approach me and after talking about what we do, would be like, hey, maybe we could lend down here. Maybe we could lend against Dominican properties, which I did look into, but the environment is not the same. You don't have an organized MLS system, so you have values all over the place. You don't have, the same structure and process to guide enforcement. So if something goes upside down, you got a real battle on your hands to try and in a foreign country, foreign environment, try to work your way through the system.
Yeah, you were
Um,
mentioning like a liquidation through auction or something.
yeah, it's
Yeah.
basically an auction there, and it's the longer I was there, the longer I realized, it's pretty easy to tell I'm not from here, you know? So there's an additional layer of fear that I'm going to be taken advantage of somewhere along the way in the process by locals. It could be an irrational fear, but when you get into the court system, who knows how things are going to go. It's just not home, right? So managing rental properties in a foreign country, difficult. I mean, do people do it? Yeah. Are they successful? Sure. There may be more headaches. I think so. I think there's more headaches in that than if you lend your money out in a portfolio of private mortgages here and just collect checks every month. And I'm not trying to minimize it. There are sometimes issues, but I think they're much more manageable on Canadian soil. Than they are somewhere else. And you just look at break it down to its simplest pieces. What are you looking for in an investment if your prerogative is all I want to do is take my $1 million and I want to make a reasonable return every year and not worry about it. If that's your prerogative, okay. So we're not remember, always want to refocus that we're talking about fixed income. Fixed income is the lowest yielding asset class in the investment world,
Yep.
right? So, we're
Re-
talking bonds, GICs, high
REITs.
interest savings accounts, REITs. Yeah, we're talking about like stuff that doesn't pay much more than the rate of inflation, right? But it's uber secure.
Right.
And then you look at the profile of a private mortgage secured against a residential property, at least in Ontario, done the way we do it. It stacks up so well security wise. Like to get, let's say, for example, a good fixed income return is 4% right now. If you can get 4, it's pretty good. Now, if I told you can get 6, that's 50% increase. The question becomes, are we 50% less secure than a GIC? I would argue we're not even close. At 6%, you have to remember, there's we did an episode and somebody put a comment about 6% not being enough yield.
Yes.
Well,
Yeah.
you're right. It's not necessarily enough yield. It's not all the yield you could get, but the profile of what you're getting is amazing for 6%. For 6%, you're getting a first position mortgage at 65% loan to value or less. Very, very difficult to lose, even if you're sloppy. Now, if you want 7% or 8%, that's all out there too. But the point being is, as a fixed income asset, it stacks up so well in the class because most of what's in that class is low return, very low risk. And I would say this is medium to high return, very low risk. So, imagine the impact, okay? Imagine on a normal portfolio, forget about being an expat and living off of the rent. Just imagine the profile, the impact on the profile. If you had, let's say, you're getting a little bit older, you're say, in your 50s, 60s, okay? And you've now moved to where you've got, say, 40 or 50% of your portfolio in fixed income because, as you get older, you're moving more into fixed income and less into, alternative investments that may be a little bit riskier, but may provide a better return. Maybe just don't need the return anymore. You just need reasonable. So the profile, if you put 50% of your money into fixed income, and then you can increase the average yield of that 50% by 50%, you can go from a 4% yield on that 50% of your portfolio to 6%. You're killing it. And what it does is the other half of your portfolio that's in alternative investments, you can take less risk there and still get what you need. Now let's talk about the expat who has $1 million nest egg and they have one prerogative: just pay for my life. Just pay for my life while I live near a beach, cheaper, in 30-degree weather, 365 days of the year. Just do that and let me relax and enjoy the rest of my life. Or maybe it's just winters, right, that you're down there. But you buy a place down there and now you've got your nest egg in a portfolio of private mortgages. They're all paying on average between 7 and 9%. And you're killing it. I mean, you're doing fantastic. You're generating $70,000 to $90,000 a year. You pay tax on it. You do. But
unless you cut ties and are no longer a Canadian resident.
That's true. So you can get around that as well. Yeah. So anyways, the point is it's not to, I'm not here to say do this is the only thing you should do. It's just to say it stacks up really well.
No, the reason it's like a good thing to be part of that conversation is that there is a mass exodus in terms of capital flight from Canada. People are looking for, investment vehicles, whether it's the US or other markets where it's like, these economies are kind of doing better than ours and I want to put my money to work. And it's like, well, if that's your approach and you want to put your money elsewhere and that's why you're leaving Canada, there's ways to allow your money to work back home using an instrument that literally our banking system, the government, everyone is in on to prop up and make safe. So it's like, that's why I wanted to bring that up for people that are leaving Canada. There's ways to make your money work back home.
That's right. And I think also, there's something to be said for how it stacks up with respect to how often you have to make any decisions about it. I mean, you lend your money out for a year. You're basically, you're basically making that decision once a year. Whereas if you're trying to execute other strategies or map the market and follow the stocks and whatnot, there's probably a lot more in and out, a lot more work to do to maintain your yield and weather different storms and whatnot. And granted, there are people out there who that is their day job in retirement, or when they get to that age, right? They relish that. I would never try to convince somebody not to. But if you're a set it and forget it type of person, right, where it's like, my hobbies aren't investing. My hobby is golf. My hobby is arts and crafts, or whatever it is. This is the type of investment that you can feel comfortable and safe in, while at the same time getting a reasonable return with a very high degree of consistency and predictability that can help you to facilitate the lifestyle that you want to live, and allow you more freedom to do the things that you really want to do. But for those people who are like, you know what, I've been saving all this money for all this time, and I just want to be hands-on, my own financial manager, you can still participate in some private mortgages and also dabble in all the other things that you want to. What's so nice about private mortgages is they have a place in every portfolio. It's just a matter of, like, what portion of your portfolio is marked for fixed income, meaning the profile is low risk, low return, stable. Is it 10%? Is it 20? Is it 30? Is it 50? Is it 100? That's the decision. It's not should you or shouldn't you. Once you are made aware that this vehicle exists and performs the way it does, then I think all you need to do is educate yourself to learn more about how it works, and make sure that you feel as comfortable as the person you're learning from does, and then decide, okay, well, where does it fit
Hmm.
in my portfolio? And for someone who's leaving the country, I would suggest that it's an easy choice, maybe to make a more significant part of the portfolio, because it gives you so much freedom, and again, so predictable and safe if it's done right.
Well, the decision is, this is the lifestyle I want. Now the issue is, how do I fund it? And they just like work so well together. There's there's a lot of unknowns. I guess that's what makes it exciting. You arrive in a new place, and then you get to explore, and your dollar goes so much further. And there's all of a sudden there's like this plethora of kind of choose your own adventure. Um, but that's great for lifestyle, but it's not so great for your money. Like, I know people that have started up Airbnbs in Costa Rica, and then next thing you know, uh, they can kind of take that property from you depending on which
I'm
judge
telling
you're in
you,
front.
I saw so many families come to the Dominican in the 4 years I was there and run out of money and leave. and and it's just, you know, they had a chunk of money when they came. It may not have been enough, and they may not have thought it out long enough or created a smart enough plan, but I saw it a lot. And so I have to assume that most people underestimate what's necessary and what's needed to move to another country and survive, unless you're going there because you already have an employment opportunity or an opportunity to make money there. But if you don't, and you're just going there to take advantage of a lower cost of living and maybe a better lifestyle, then it's so paramount that you have a plan for how you're going to extend the life of your money,
Mhm.
right? Your money is going to erode unless it's making money for you. And
Yeah,
sure, can it work in an Airbnb model or a rental home model? Sure, it can. But there's a lot of cost. There's a lot of maintenance and so on. Man, one thing I learned, I'll tell you, being in the Dominican, is the power of salt and the air. Like, the ocean air eats everything. I mean, it eats everything. It
oh
eats
yeah.
your barbecue. You leave your laptop out on the patio, it eats that. Guys, I learned, I know we're off topic a little bit, but I learned while I was down there that bar owners who are like have outside televisions, they leave them running and always, never turn them off. Because if they turn them off, they might not be able to turn them back on. Like, so yeah, it's things like that, that as a Canadian, you think snow and salt on the ground in the winter is damaging to your car. I can't even tell you what it does to a car when it's 30 degrees and right by the ocean all day, every day, 365 a year. It's crazy. So there's things we don't know. And, maybe, I mean, if you're wanting to be a landlord in another country, maybe private mortgages could help you get there, because the first year or two while you're getting your bearings straight, you have this very consistent, predictable income. And then you learn the marketplace you're in, you learn how things work, you see what other people are doing, what mistakes they've made, and so on. And you get your feet wet, and then maybe build a house or buy something and rent it, and so on. So, I mean, there's lots of ways to do it, but I'm here to tell you, if you're planning to do this, this is a great way to secure the financial side of your journey before you go, and then you can make some decisions later if if it's not enough, if it's you want some more excitement, you want whatever it is that you wanted to do. But great place to start, and I think a position in everybody's portfolio, for especially for expats, no question.
Oh, once the decision has been made to leave, it's almost always the second question is like, where's my income going to come from?
Yeah,
Whether it's you're going to Portugal or Italy, I think that this I don't know if it's an immigration program, but you can literally buy houses in the south of Italy for like 50,000 euros or something, but you have to commit to uh, getting them back into shape because these things are crumbling, right? So you got to hire like local labor, like Sicilians, and you got to figure out, how to restore the property to its whatever the municipal standard is, and it's their way to like revitalize certain neighborhoods, but it's all on you. You get the house for
yeah.
cheap, but then it's all on you, and then you can Airbnb if you do it successful, but it's a lot to learn when you just arrive in a brand
It's
new
also, and that's the message, right? Because we don't, I don't want this thing flooded with why are you destroying, attacking, landlording in other countries. No, it's not. It's not that. It's that you're going somewhere new. You may just need some runway, and it may not work. Like, so if it doesn't work, at least you got this in place to sort of, as to stabilize you. And again, if you're a set it and forget it type of person, there's not much out there that rivals it.
Yeah, 100%.
So,
All right.
anyways, can't wait to see the comments.
Yeah. Later.
Okay, bye.